The purpose in this course is to dive into the details of the budget comparison for property managers' financial report and make sure that we really understand everything that makes it up. Let's dive right in. As you all should know, the budget comparison is the financial report used monthly by the operations and accounting team to review the park activity and complete monthly variance reporting. It's important to do this review to know what is truly going on at each park and to ensure all processes and guidelines are being followed. First, let's talk about the general ledger. The general ledger accounts make up our financial statements. All financial activity that goes on at a park has a home in one of the general ledger accounts. When looking at the budget comparison, you will see each general ledger account has an account number and an account description. Next, let's talk about the three different sections of the budget comparison for property managers. First, we have assets, which are park improvements categorized as CapEx. Second, we have income, which is what we charge our residents. And third, we have expenses, which are supplies and vendors that we need to maintain the parks. Assets on the budget comparison for property managers are park improvements that are currently categorized as CapEx on the budgeted park improvement tracker that are currently in process or are completed at our parks during the time frame of the report that was run. So if we pull the report for May, the CapEx items that will be reflected are park improvements in process or completed through the month of May. The path of an asset is, first, we get an approved budgeted park improvement. Second, we enter a PO in Avid and it is approved. Third, we order the work to be completed. Fourth, we receive the invoice in Avid and it is approved. This triggers the asset to be recorded in RM, which then makes the asset show up on our financials. This also creates an accounts payable, which is a liability we need to pay. Fifth, we cut the check to pay the vendor and the accounts payable is relieved. Income is anything we charge to our residents in their Manage America ledger. Some examples of charges to residents are base rent, home lease income, sales tax, utilities, tag fees, and the list goes on and on. Once an item is charged to a resident's ledger, that is what then triggers the income to be recorded in RM, and it also creates an accounts receivable, which is an asset showing we earned the income. Once the resident makes the payment, the accounts receivable is then relieved. An expense is any bill that we receive that is not an asset. The path of an expense is first, we enter a PO in Avid and it is approved. Second, we order the work to be completed or materials to be shipped. Third, we receive the invoice in Avid or receipt in Smart Data and it is approved. This triggers the expense to be recorded in RM, which then makes the expense show up on our financials. This also creates an accounts payable, which is a liability we need to pay. Fourth, we cut the check to pay the vendor and the accounts payable is relieved. Now that we know a little more about our general ledger and the different sections of the budget comparison, let's figure out how we find details to assets, income, or an expense on the budget comparison report when we are doing our variance analysis. When you are reviewing your budget comparison for property managers and you have identified all items you need to explain on your variance analysis, you will need to get the details of what actually got recorded in the period you are reviewing and compare it to what was budgeted in order to explain them. To get actual expense details, drill down into the general ledger and review the activity for the period. Do this by selecting the amount for the general ledger account in the actual section on the budget comparison for property managers. If you drill down into an expense general ledger account and there is not enough details for the bills in the description field, this means that good descriptions were either not entered in Avid or Smart Data when the invoices were created. You will then need to drill into the bills by clicking them in the general ledger to get further details and review the attachments by also clicking them in the attachment section. If you drill down into an expense general ledger account and there is not enough details for the journal entries, this means that good descriptions were not entered by your accountant when the journal entries were recorded. You will then need to drill into the journal entries by clicking them and reviewing any attachments by clicking them in the attachment section. If there are no attachments or there still is not enough details, you will need to reach out to your accountant. Once you have drilled down and fully figured out what actually happened during the period for the expenses and income, you then need to figure out what was budgeted to happen to give a full description. To do this, you will review the explanations of your budget for each account.
To recap, accounts receivable is recorded when income is booked. Income is recorded when charges are booked to residence ledgers. Expenses are recorded when invoices are approved, and being as detailed as possible when you create POs, code invoices, and code chase charges is critical to making your variance analysis go smoothly.
If you ever find yourself lost when completing your variance analysis, these documents in the Flamingo Zone will be helpful in your success. Variance report training, variance report instructions, drill down into details in RM, and PO and invoice descriptions in Avid.